Hey YouTube, welcome back to Military Money Mastery. I'm Dave, and today we're going to be going over the stock basics. Man, this is a super important topic to be going over, and something that I'm super excited about, and I hope that you guys are too. So today we're going to be going over what are stocks. I'm going to give you some little definitions of them, and I'm going to break it down what it actually means. What can they do for me? You know, like, is a stock very beneficial for me? Absolutely, and I'm going to explain to you why. Are they risky? Everybody thinks this. They're like, oh man, stocks, super risky. You know, what happens if 2008 comes around again? It's like, look, if you were in stocks in 2008, you have more money today than you did then. I guarantee it. When to invest? You know, when's the right time to invest? Is it today? Is it tomorrow? You know, is it 10 years from now? We're going to break that down too. All right, so if you couldn't tell, we got a kind of a new view. Got a new desk. It's one of the ones that rise, so I can stand up and do this now, which is kind of nice. But let's go over some of the stocks. So we're going to go over the basics of stocks today, obviously. So we're going to start off by, you know, what is a stock? So a stock is defined as a share of ownership in a company. A stock represents a claim on the company's assets and earnings. So there's usually two types of stocks. You have common and preferred. So a common, usually when people talk about stocks, they're referring to common stock. In fact, a great majority of stocks are issued in this way, obviously, because it's more common, right? So common shares represent a claim on profits and confer voting rights. So when you have a common stock, you actually have voting rights in the company, which is pretty cool. Investors most often usually get one vote per share, but you know, it depends on the company. And you use these shares to elect board members who oversee the major decisions of the company. So you also have preferred stocks. So preferred stocks are kind of similar to bonds and usually don't come with voting rights. Some do, some don't, but it kind of depends on the company. So with preferred shares, investors usually guaranteed a fixed dividend for having the preferred stock. And it's different from a common stocks because common stocks typically have variable dividends, and those are declared by the board of directors. So let's go over what stocks can do for me. So stocks have the potential, they're not guaranteed, but they have the potential to earn you money over long term. We're not talking about day trading here. You know, day trading's fine. If you want to do that, you know, knock yourself out. That's not how I go. And I'm going to teach you about long-term investing in this channel. So we're going to look over some ways to invest to increase our own net worth over a long period of time. So stocks have the potential to earn what's referred to as compounding interest. Compounding interest is defined as the addition of interest to the principal sum of a loan or deposit, or in other words, it's interest upon interest. So it's the result of investing interest rather than paying it out. So that means you, instead of, you know, withdrawing money, you just keep it in and let it keep building. So that interest in the next period is then earned on principal sum plus previously accumulated interest. I know it's kind of a lot of words, kind of hard to understand, but you leave money in, you just let it keep making money for you. So a quote from Albert Einstein, you can see right here, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Also, you have another one from Warren Buffett here. It says, my wealth has come from a combination of living in America, some lucky genes, and compounding interest. And those are two pretty smart guys, and they definitely know what they're doing. So compounding interest is really good. Stocks also have the option to earn you what is called dividends. So these dividends are defined as a reward for your trust in the company, and the company management aims to honor the sentiment by maintaining a robust track record of dividend payments. So dividend payments reflect positively about a company's working and help maintain investors' trust. Dividends are also preferred by shareholders as they are treated as a form of tax-free income for shareholders in many jurisdictions, while capital gains realized through increase in share price is taxable. Yeah, that's right, you heard it. You can potentially have dividends and pay zero taxes on those earnings. So what this really means, I know it's kind of hard to understand because I'm going through like the literal definitions of it, but dividends are, you know, the company pays you for having faith in the company. So every quarter every month, depending on what stock it is, and it really depends on the stock. You can be getting paid, you know, a percentage or 2% and 3%, whatever, of that stock's worth. So something to keep in mind, and that's how a lot of people earn money, especially in retirement. You don't just pull, you know, say that you make $1 million in the market, you don't just pull out $1 million and like, oh, now I have $1 million and that's what I'm going to live on. No, you can reinvest that, earn dividends, and I think it's like 74,900. As long as you're under that number, 0 taxes. So that's really awesome. And I don't know about you guys, but I could probably live on 74,900 and be totally fine. So let's go over our stocks. Risky. Something to note, you know, about stocks before we get too far into it. So a stock is corporate property, and it's legally separated from the property of shareholders, which limits the liability of both the corporation and the shareholder. If a corporation goes bankrupt, a judge may order all of its assets sold, but your personal assets are not technically at risk. So you will still maintain your shares, even though if a company goes bankrupt, your share price is probably going to go down because a lot of people are trying to get out of it, but you're still going to have those shares. So that's pretty nice. So just like all investments, you know, stocks are much more volatile than, say, bonds or something like that, and stocks do have risks. Don't let anybody tell you that they don't, because they do. So the bottom line is there's no such thing as a risk-free stock, you know, or a business for that matter. Although every stock faces universal risks and additional risks specific to that business itself, the rewards of investing can still heavily outweigh them. As an investor, the best thing you can do is know the risks before you buy in. So just know what you're doing before you go in, know what you're willing to lose, and perhaps keep a bottle of whiskey and a stress ball near you for those terrible markets, those bear markets, you know, like last October and December of 2018, you know, it was like, it was going down. So, you know, just weather through the storms. An important keynote is, you know, don't worry about stocks over the short term. You know, there's days I'll log into my account and I'll see I've lost 1% or 2%. Don't let that get you down. You know, you're investing for the long term. If it's a good company and you have faith in the company and you know the company's going to be doing good, keep your money in there, because it's going to make you lots of money over the long term, I promise. It's you know, if you lose 1% today, it's still going to be worth more in 10 years than today. So just keep that in mind. So when should we be investing in stocks? And right now is the best time you can invest in stocks. Today, you know, was it March 1st, 2019 is the best day you can start. Just joking. Today actually is the best day you can start. So anytime that you can get into the market, you know, as of right now, it's 4 o'clock on the West Coast. So the stock market's already good and closed. But Monday, you know, get in there, start looking at stuff. You can even start looking at stuff now and, you know, have a good idea what you want to invest in on Monday. So the best thing is you get in there, you make mistakes, you learn, you start increasing your wealth, start increasing your knowledge, start talking to people about this kind of stuff. It really, really helps as far as like just increasing your overall knowledge and net worth. You know, there's so many good things about investing in the stock market. I can't even begin to tell you guys how good it's been to me. So I started down the path, you know, when I first started investing. It's actually January of 2017. I set my New Year's resolution that I was going to start investing in the stock market. I had no idea what was going on. So I made some mistakes, you know, it was a bunch of dumb mistakes, you know, that I've learned over the last, I guess, 2 years. And I'm still making mistakes and I'm still learning from them. But, you know, I started trying to do penny stocks and lost some money there. Not tons, but, you know, lost some money there. And I even, you know, started buying individual stocks with commissions of $9, you know, and that's not something that you can really recoup. So, well, it takes a while to recoup that, but just keep in mind, you know, you're going to make mistakes at the beginning. No matter how many videos you watch, no matter how much you do, you're going to make mistakes in the beginning. And the best thing is to just weather those mistakes, you know, learn from them, you know, make them an opportunity to learn. So the best time to actually start is really when you're younger. So, you know, get your kids started investing. I'm not saying they have to be looking at the stock market or whatever, but give them a few bucks, put it in, you know, like a ETF or a mutual fund or whatnot, and let it ride. So I bet you guys didn't know that you can actually pay for your kids' college this way. This is what my wife and I plan on doing eventually when we have kids. But you know, you put $1,500 into a mutual fund or a ETF, and we're going to go over both of those in later videos, and just let it ride until they're 18, 19, or whenever they're going to start college. Or if they don't want to start college, guess who gets to buy a new car? This guy. Just kidding. But you know, it's a good way to use that money for something good. And the way that you're going to make all that money is just compounding interest. Oh my gosh, it is so good over the long run. Alright, so future episodes, we always discuss it, but we've looked at stocks, and I want to start looking at commodities next. Somebody actually requested it, and we're going to do that. I actually don't have tons of experience with commodities, but it's something that we should all know about, and it's something that I'm actually learning about, and I've been studying it for the last week or so. And there's actually potential in there to make quite a bit of money, and it's great depending on what the market is. You know, I actually got into some commodities, I think in, you know, October or December, and, you know, made a little bit of money, not tons, but even when the market was down, I was still, you know, able to make some monies because of commodities. But anyway, I'm Dave from Military Money Mastery. Thank you guys so much for tuning in. Thanks for sharing the video, everybody. Please hit that like and subscribe button. It really helps out the channel, and I'll catch you guys in the next video.